Are you feeling stressed about your finances from the last several months? Don't worry. Most people feel the same way you do. At Nassau, we strive to provide our agents, policyholders, and the general public with the knowledge and tools to reimagine and achieve a happy retirement. Enroll in the short course that will lay out a simple process to help you put more money in your pocket today. Are you ready to start?
Mortgage rates remain historically low. If you haven't recently refinanced your home, see if it makes sense. For instance, what if you took a 30-year fixed-rate mortgage loan in 2008? By refinancing today, you could potentially save more than $500 a month in monthly mortgage payments on an average loan. What could you do with this extra savings? The average mortgage loan today is around $335,000. If you last took a 30-year fixed-rate loan in 2008, your rate could have been 6%. If you took that same loan today, your rate could be as low as 3.335%. Assuming you refinance that same loan today, you could pay $1,474 per month instead of $2,008 per month. How do you find out if this makes sense for you? Follow these steps. 1. Find out your current interest rate. If you don't have the paperwork handy, call the servicing company and ask them. 2. Look for comparable mortgage interest rates today. It's an easy search on the internet to see if today's rates are lower than when you took out your loan. 3. Check your credit score. Many banks now give your credit score to you for free. Make sure your credit score hasn't dropped in the last year or so. If it has, find out why, and if you can, get it corrected. This is an important number for lenders to use so you can receive their best advertised rates. If it remains steady, keep it going. Shop for the best terms with multiple lenders. Refinancing a mortgage unfortunately costs money to process. Make sure you understand all fees and how they will be charged, whether you pay for them up front or if they get rolled into your monthly payments. 5. Get all your finances in one place. You'll need them when you apply. 6. Tidy up your house for the appraiser to help ensure that you get the highest possible appraisal. 7. Make sure you have a plan for how you will use the savings from the new loan. Here are a few questions for you to research on your own to take advantage of these savings tips. What is your mortgage interest rate and the length of your loan? What is the lowest rate you can find today? And what will you do with the savings? The average credit card debt today is about $6,200. This amount typically costs consumers close to $1,200 per year just on interest alone. With some annual percentage rates, often called APRs, at 25%, the interest charges could reach as high as $1,800. If you have more than one credit card with debt, and many of us do, you may want to shop for cards with low or 0% APRs and make balance transfers to reduce interest charges. Could now be the time to pay off a bill you have carried for a long period of time? A 0% APR balance transfer could be a way to save $100 a month over the long haul. Wondering how to consolidate your credit card debt? Follow these steps to get started. 1. Find out your current interest rate per card. If you don't have the paperwork handy, call the servicing company and ask them. 2. Look for comparable APR rates. It's easy to search the internet to see if today's rates are lower than the cards you currently have. 3. Make sure your credit score hasn't dropped in the last year or so. Many banks give your score to you for free. If it has dropped, find out why and begin taking necessary steps to correct it. 4. Shop for the best terms with multiple credit card companies. Make sure you understand all fees and how they will be charged. 5. Get all of your finances in one place. You'll need them when you apply. 6. Once you get your new credit card, transition your debt to the card with the best rate. We encourage you to speak to a financial advisor before opening additional credit card accounts or canceling any existing accounts, as this may have an adverse impact on your credit score. Here are a few questions to research on your own to take advantage of this savings tip. What is your total debt on all of your cards? How much did you pay last month on finance charges or fees? And what could you do with the money you are spending on fees if you stop paying that amount each month?
When's the last time you took a good look at your mobile phone plan? You may be shocked to realize that the average cost per mobile phone line in the United States runs about $100 per month. How many lines do you support? Making simple tweaks can lower your phone bill and lead to substantial savings. For instance, opting for autopay may save a family of 4 about $20 per month. Skipping an upgrade can save on average $50 per month. These small savings can really add up. Additionally, a phone provider often runs retention specials. Call them to see what savings they may be able to offer you at this time. You want to get started saving more on your bill? Follow these steps. 1. Take a look at your plan and make note of the benefits and services you are using and those you are not. 2. Do your research on competitive pricing. Look to see if there are specials that you could take advantage of to reduce your monthly costs. 3. Call your mobile phone provider to negotiate a new price based on the benefits you actually use and leverage the competitor pricing that you've researched. 4. If you're not getting the traction with the salesperson immediately, suggest that you may cancel and take your business to the competitor. Most likely you will trigger them to negotiate with you to retain your business. Here are a few questions to research on your own to take advantage of this savings tip. How much is your total mobile phone bill? And how much do you pay per line? Americans spend on average $220 per month on cable. If you could cut your bill by 20%, what could you do with the extra $500 each year? Cable companies don't want to lose your business. Have you taken the opportunity to negotiate with your cable company? Follow these steps to get started. 1. Take a look at your plan and make note of the benefits and services you are using and those you are not. 2. Not using everything in your plan? Drop to a cheaper package. Every couple of months, take a few minutes and evaluate your usage. You might not need the fastest internet available or all those premium channels. 3. Bundling your services with the same provider for your cell phone and internet services can often save money. 4. You might be surprised as to how many providers are willing to haggle on prices, especially if you point out how much cheaper a competitor is. It also doesn't hurt to see what sort of deals are going on with the competition. Many providers will match this price. 5. If asking nicely and negotiating don't work, suggest you'll leave the cable provider and take your business elsewhere. When you say you're leaving, many sales reps will offer you a better deal to convince you to stay. Here are a few questions to research on your own to take advantage of this savings tip. How much was your last cable bill? What channel bundles have you selected? And are you using all those services?
Prepping more meals or larger portions that you can serve for lunch and dinner for several days can help stretch your food budget instead of going out to eat. Since the pandemic, 78% of households have saved, on average, $245 per month by not going out to eat. How do you go out less and maximize your food budget? Take a look at these tips. 1. Look to see if there are discount grocers in your area that could save you money. 2. Before heading to the store, make a clear meal plan for the next week or two. Consider looking for recipes and dishes that include ingredients that you love, even if it means a little extra cost. You are far better preparing a meal that costs $1 per person that everyone likes than preparing a meal that costs 60 cents per person that everyone hates. Why? It's simple. People will start to reject that super cheap diet and will end up making food choices that are a lot more expensive. 3. While you're in the store, focus solely on that grocery list and consider buying the generic store brands whenever available, unless there are specific reasons not to. Here is a question to research on your own to take advantage of this savings tip. How much do you typically spend each day on lunch when you are at the office? Resetting or upgrading your thermostat can help you save money. Adjusting your temperature by 7 to 10 degrees for 8 hours a day can save you as much as 10% on your bill. The American Council for an Energy Efficient Economy says that you can save 3% on your heating bill for each degree you lower your thermostat. Try these tips at home to keep your heating and cooling bills in check. 1. Invest in a smart thermostat that you can program to optimize your daily heating and cooling schedule. Different manufacturers tout different levels of savings. For instance, did you know that you can save on average 10 to 12% on heating costs and 23% on combined heating and cooling costs? For an average household, that could mean a savings of a few $100s per year. 2. If you don't have a smart thermostat, see if you can program your existing thermostat to lower your temperature. Just a few degrees during the days or times when you're not in your home can make a difference. 3. When you're home, think about what causes you to turn the heat up. When you get back from work after a long day, the first thing you notice is probably how cold it is. It's just natural to walk over to the heater and turn the heat way up. Avoid this. Sure, turn up the heat to a reasonable temperature, but instead of blasting it at 75 degrees, keep warm slippers, a blanket, and a hat somewhere convenient. No more thinking. It's just a natural part of coming home and putting your bag down. Here are a few questions to research on your own to take advantage of this savings tip. What was your heating bill last December? And what was your cooling bill in August?
Ordering online saves a trip to the store, reducing gas expenses and car mileage, and avoids impulse buying that contributes to a higher food bill. Did you know that you can save more than $750 a month between the gas you save driving to the store, skipping impulse purchases, and the hours worth of extra productivity it frees up? Here are some more perks and tips of grocery shopping online. Shopping can be done on your timeline. Place your order on your lunch break at work or while you're catching up on your latest movie. Shopping online helps avoid duplicates in your basket by allowing you to easily see what you have and don't have. Additionally, by making your decisions one product at a time, you're free to compare prices in a pressure-free environment. You can also more easily see the full list on what's for sale that week to secure more savings when you check out. Online grocery shopping helps you stick to your list and save more money. Sometimes a trip around the grocery store makes us feel like we've earned that half gallon of ice cream or extra bag of potato chips. Impulse buys can be a thing of the past. Finally, for the convenience of having groceries delivered, there is a great time-saving feature. While you're at home enjoying the afternoon, the doorbell will eventually ring with your groceries, and you don't have to drive to the store and walk up and down the aisle to get them. Here are a few questions to research on your own to take advantage of this savings tip. What is your typical weekly grocery bill? And how many times have you tried ordering your groceries to be delivered?
Remember that free trial you signed up for months ago on a new streaming TV service, magazine subscription, or gym membership? According to a 2017 survey by creditcards.com, 35% of consumers signed up for accounts that they were enrolled in autopay without them realizing it. If you no longer use any of these subscriptions, rest assured the service has not forgotten to charge your credit card. Does this make sense for you? Follow these steps. 1. Take an audit of your credit card and bank statements to identify subscriptions like these that could be eating holes in your wallet. Go back at least 6 months to identify current subscriptions you don't need. 2. Do your research to identify how to cancel them, which could be as simple as a few button clicks in your profile, or a quick in-person visit. Cutting $10 per month service from your budget can save $120 over a year. Here are a few questions to research on your own to take advantage of this savings tip. Go through the last 6 months of your account statements. How many subscription charges can you find? And how many of these subscription services did you use last month?
Make a budget for major purchases like cars, televisions, or appliances. By spreading out the purchases, you'll avoid building expensive credit card debt. A couple of practices that can help with major expenditures include planning ahead, finding the best place to save, establishing an emergency fund, and being cautious when using credit cards. Let's break these practices down. 1. For large expenses like a vacation, car, house, or holiday fund, it may be easier to set up separate savings accounts for each large expense. That way, you can easily track where you are with your goals at any moment in time. 2. If you know you're going to need a new car at the end of the year, estimate how much you'll need to save before then. Divide that by the number of paychecks you'll receive prior to that date, and you'll know exactly how much of each check you need to stash to cover the cost. 3. If an additional fee isn't charged, it's fine to put a big purchase on a credit card to earn the airline miles, cash back, or rewards points that come with it. Just make sure you've budgeted for the amount you're charging and pay off your card immediately to avoid incurring interest. 4. Also consider establishing an emergency fund, which can help if you lose your job, become ill, or need to repair a necessity, like your car or roof. As a general rule, consider maintaining a balance of at least 3 to 6 months of your living expenses in case of these unforeseen events. Here are a few questions to research on your own to take advantage of these savings tips. What are the 3 largest items you would like to buy in the next 3 months? And can you space out those purchases?
Most banks offer automatic scheduled transfers between accounts. Once you've made some of these changes, set your bank to transfer the newfound savings each month into a separate account. In addition to boosting your savings, an automatic savings transfer can help you with budgeting and with managing your spending habits. One of the features of automatic savings transfers is that you can adjust your transfers anytime you want. If you stay the course, you could see big rewards over time. For example, if you save $58 a week, in 1 year you would have $3,000 saved. This could be enough for a down payment on a car, a home repair, or a vacation.